Hello traders, Gary Wagner for Trending Markets, just about 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, 27th day of August, 2015, and we have seen tremendous movement in the markets today. First, Dow Jones Industrial Average, second day, tremendous recoup, closing up about 369 points, 2.27% higher on the day. First, we look at our daily chart. When we do that, you can see how this market dropped so precipitously, this tremendous fall out of bed, so to speak, in which we saw the Dow Jones Industrial Average, which began trading roughly before the sell-off at 17,500, only to see it at its low go below 15,500. Considering that kind of a move, you're looking at a 2,000 point drop in about a week. Now, when we look at the market itself, we had one of the strongest sell-off days. That occurred just at the beginning of the week, Thursday, Wednesday, Tuesday, this being Monday right here, in which the market did make that low and attempted a staged recovery. You can see how it comes up off of that low. However, that wasn't to be. The market opens on the lows the following day, but however, trades and actually trades higher by a couple hundred points, only to close back in negative territory by a couple hundred points. That changed yesterday. Yesterday, we saw the market moving dynamically to the upside, 600 point plus move, I believe, and it closes near the highs. Today, we have that move we just spoke about, and it closes near the highs on the day. We're looking at standard candlestick charts, so you can see the difference between the open and the high, and they almost closed on the high of the day. If you recall from yesterday's show, we talked about the fact that when you look at a weekly chart, and my God, you've got a candle here that I've very rarely seen. Look at the length of the tail on this candle, meaning the differential between the low of the market and on the bottom where it really opened on Monday, because that's what this rectangle stands for. Is this is where it opened, and this is our current close on Thursday. If you recall, when we looked at the same candle yesterday, it had a much smaller body, and that body was red because we were still looking at a negative on the week. That is no longer the case. The fact that we have gone green means that we are now positive for the week. Now, whether or not we can state categorically that the correction that we just witnessed, we've weathered it and it's over, or whether we could be looking at some sort of bull trap, that answer can only be, or that question, can only be answered over the next couple of weeks as we watch how this unfolds. I don't think anyone has a definitive answer on that, and anyone who says they do, I'm not going to believe them wholeheartedly because it's an assumption and a hypothesis. Now, so when we look at the market in that way, you can see what a tremendous recovery we have seen. Now, of course, in the mini S&P, we've got similar activity, tremendous activity on the weekly candle. Of course, it's going to look very much the same. You've got that extreme long tail on the market. But what is interesting to me is if we look at some of the recent dips that we've seen, you can see that this dip certainly ended in that way, in which you had a period in time. Again, this is a weekly chart, so you're looking at a week in which the market traded dramatically lower but closed up near the highs, and that following a sell-off. You can also see that here when we had our correction come in. Now, again, this is a weekly chart, so even here you're looking at 1, 2, 3, 4, 5 weeks. Here you're looking at 3 weeks. So you can see that we have seen this kind of occurrence before as the market is sold off and found some sort of bottom. Now, it's certainly not as extreme here, but you do get that telltale sign of the long tail, the differential between where the market opened and closed and where the low is of the week. So when we look at this candlestick here, we can definitely see it's exaggerated, but nonetheless, it has some of the real characteristics that we have seen in these other markets. Now, we also had a very, very strong dollar. Dollar continues to move higher. When we take a look at that, that was up almost 0.75% on the day. When we look at our weekly chart, you can see that we've had a dynamic gain for the week itself. So that's definitely, as we talked about the other day, it has shown us at this level of support here, 92.30 on a technical basis. That's at 38% retracement level. That actually showed us something. That was a very valid technical point in time, and that really is a supportive area in gold. And now to the one trade that we had on. We pulled profits today, but look at crude oil. Look at that surge in crude oil, 42.56. Now, if you recall, we went short at 41.87. This market has just been up and away. Now, the good news in this particular move, and let's go ahead and get our highs and lows in the marketplace so you have a better idea of what we're looking at. We went in at 41.87, but we did raise our stops. As this market dipped below 39 and 38, what we did is we lowered the stops to 40.20. So we went short at 41.87. We covered at 40.20. So we roughly pulled $1.50 out of the market. A decent trade, decent profit. And considering how fast we saw this market rebound, without a question of a doubt, a stop was what we needed to have in the market. And the real question is now, what are we going to see in oil? Because why did it move in the way that it moved today? Now, when we look at this weekly chart, you can see that it's come up to these lows that we recently had. And so the question is, will this become resistance, or will we see a clip up and it become support? If it does become support, will we see a small rise, or have we witnessed the end of these really, really depressed oil prices? My sense is we have not seen the end of these depressed oil prices. We could even see a bounce here. Realize that when this market came down in the way that it did, it had a primary bounce, that first bounce, which took us to about 58.5 per barrel. Market came down and tested this area for a second time, and then traded as high as 62 per barrel before plummeting to these most recent lows. And of course, if you take a look at this weekly chart, you can see this is where those lows were extremely exaggerated at about 38 or 39 a barrel. That's one of the primary reasons we trailed that stop tightly, and we were able to take profits out of this trade. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.